A very good afternoon, all my dear accountancy students, and welcome once again to the lecture of Advanced Accounting and Auditing Paper 1. This is Professor Shaurya Shah welcoming you all to my lecture. Dear students, till the last lecture, we had completed the sums regarding your levels of material chapter. Fine. So today, I hope you all must have done the practice sums also. With that hope, today we'll be starting with the last part of that chapter, right? A very small part that is related to your stock register, students, right? Now in this part, again, very rarely it is asked in your university, right? But whenever it is asked for your 3 to 4 marks, right? You need to prepare a very short sum. So we'll be understanding the concepts. Again, in theory part, it is again and again asked regarding your FIFO and LIFO methods, right? Now what are these methods, students? What do you mean by stock register and what do you mean by inventory valuation? Fine. Now, as you all know, students, we have understood the chapter of your material. We have understood various levels. We have understood the theory of the materials also, right? So, whenever materials are purchased, right, we know the exact price of that material or the price at which the goods were received. Suppose I have purchased 1000 units of material at 10 rupees each, fine, and I am in a manufacturing firm. So I know the purchase price of that particular material, but when I issue those material, right, so at what price I am issuing it, and I am not purchasing only one quantity of material, right? Today I am purchasing 1000 material, then again day after tomorrow or again after 2-3 days I am purchasing 2000 more quantity, then 3000 more, right? So when I am having a lots and lots of material quantity purchased at different price, when I issue that for production or when I sell them, right? So at what price I need to give to the consumers or what price I need to issue it to the production department. So there the question arises, right? So now for calculating those and even at the time of closing stock at the end of the year, right, I need to calculate. So for that question there are various methods which are used for the purpose of valuation of material and for calculating the prices, right? Again, these are the main methods. It may be either FIFO, it may be either LIFO, right? Again, it may be weighted average method. So there are various methods you need to calculate, but for your syllabus purpose, there are only three methods which are asked in your exam, right? Again, there are various prices at which the materials are kept. There are various prices at which the materials are issued, right? So in order to determine at what price the material will be gone, right, what price material will be issued and what price the material will be calculated for closing stock, you need to adopt these three methods, right? Remember students, there are various methods. It may be specific cost method, it may be identifiable cost method, it may be FIFO, LIFO, it may be fixed price method, standard price method, inflated price method. But for your syllabus purpose, you need to study these three methods in detail. Fine. So I hope everyone ready with the things. Fine. So we'll be starting with today's part. We'll be understanding the method first, the working of it, and then we'll be seeing advantages, disadvantages. This will be also useful to you for your theory part, right? Because for 4 marks FIFO and LIFO comes. So again, very easy part, you can understand and you can write down. Fine. Apart from that, we'll be seeing the format of the sum, and again in the coming lectures we'll be solving the sums regarding it. Fine. I hope it is clear. So starting with the very first method, dear students, that is FIFO method, right? What is FIFO? FIFO, the name says first in, first out, right? I hope it is clear to each and everyone. First in, first out. Now, what do you mean by first in, first out, students, right? So, we'll be understanding it. What is the overview of the FIFO method? Fine, we'll see that the first in, first out method of inventory valuation is a cost flow assumption that the first goods purchased are also the first goods sold, right? Take a very simple example. Suppose today you purchase some of the, again we can say, food articles. Tomorrow again you purchase some of the food articles, fine? So which food you will consume first? the earlier or the next one, right? Definitely the earlier. Why? Because the earlier ones you have purchased have a chance that they may get deteriorated fast. Fine. Again, take a very simple example we'll see in the coming presentation also, right? Regarding the milk which you have purchased. Fine. Today you have purchased the milk. After 2 days you have again purchased some quantity of milk. Which milk will you use first? Right? Definitely 2 days back you have purchased that milk, you will be using immediately. Fine. Why? Because it is a perishable commodity and it will get deteriorate fast. Right? Same logic applies here in first out. What is the thing? Whenever you have purchased the material or whenever you have purchased the raw material, what you will use first? Whatever you have received first. Right? The purchase of your earlier quantity will be used in production first and then the later one. That is your first in. Whatever comes first is used first, right? So again, this assumption closely matches the actual flow of goods, and so it is considered the most theoretically correct inventory valuation method. The FIFO flow concept is a logical one for business to follow, since selling of the oldest goods first reduces the risk of obsolescence, right? Because the oldest goods which you have purchased, if you sell it, the risk of obsolescence, right, the risk of becoming outdated is also reduced. So this is first in first out. You will understand it better with this example. Again, when you go to grocery shopping, you may notice that perishable goods, right? Perishable goods means those goods which are spoiled very early, like milk, have expiration or sell by dates on them, right? Expiration, you may see in the best before tag on any of the perishable products, right? Again, on the food items also, so that is expiry date or sell by the dates. All grocery stores apply the FIFO inventory management method to overseeing the points. Fine. So again, this FIFO method, take very simple example of your departmental store. Whenever you go to departmental store, right, for example, I take Reliance Market. So Reliance Market are adopting such policies of your FIFO or any XYZ departmental stores, right? What do? They particularly see regarding the various products, right? They are having products according to the expiry date, they are selling it at the earliest, right? Suppose the expiry date is nearer, they will reduce the price, but they will try to clear the thing, right? Why? Because once the thing is expired, it has no value and it is a loss to the firm. Fine. So what do? All the grocery stores apply the FIFO inventory management method to overseeing their goods. Because of this, you will notice that the milk in front of the shelf will have an earlier expiration date due to then their milk on the back side, right? This happens because milk with an earlier expiration date, because the grocery store earlier than the milk behind it later did, right? Hence the goods first I bought by the grocery store are first out. It would be impractical to try and sell newly received milk before the older received milk, as the first bought milk supply could expire, then the milk would be spoiled, right? Very simple example of milk we are using to understand the concept, right? This can also be termed with the help of the vegetables. The vegetables which you are again purchasing for preparing the food, the vegetables which you have earlier purchased will be used very much first then compared to the other. Fine. So I hope first in first out. Again, you will be very much clear with the help of this pictorial representation, right? FIFO, as you can see in the picture, suppose we termed our material as your 1, 2, 3, 4, right? 1 I have purchased earlier, second after that, third after that, and fourth after, right? Very simple. The way they entered from here, 1 comes from here and it goes out first. Second comes from here and it goes out after. Third and fourth, right? So first in, first out. Hope it's clear. How to do the sums, that is a different part that we'll see in the later part of the lecture. But understand the theory first, you need to write down in the short notes also. Fine. I hope everyone now clear with that part. Now, what are the advantages of FIFO method, students, right? As we always know, this method is mostly used for the, we can say, perishable goods or such kind of material which is again very precious, or such kind of material which can be spoiled very easily, right? So we'll see the advantages of that. What are the advantages? FIFO method is easy to understand and operate, right? As we all know, the first come and first go. The price of also the commodity which is first coming will also be going there, right? So it is easy to understand and operate. FIFO method is useful where transactions are not voluminous and prices of material are falling, right? It is useful where such a thing takes place, where it is not voluminous, right? Transactions are in limited quantity. It may be either in some of the numbers, and second is price of material is continuously falling, right? So when you purchase the goods, right, definitely you are using it at the earliest. So when the prices are even falling, you can use this method because the loss is again very much minimum. The next is FIFO method is suitable for bulky material with high unit prices, right? Again, those material which are very much bulky, right? Take for example steel, it is very much bulky with high unit prices. Per unit, per kg, per ton prices are very high. So there FIFO method is very useful because the thing which you are purchasing immediately you are using it, fine. So the next again material purchased at different prices are again used in that sequence only, right? Again, FIFO method helps to avoid deterioration and obsolescence. The same thing we saw with the example of your milk, right? It helps in reducing the deterioration. Suppose I have purchased the thing which is later on, right? And I have purchased the thing which is earlier. So I'll use the thing which I had purchased earlier. Why? Because there is a risk of deterioration which is reduced, right? Again, the risk of obsolescence becoming outdated is also reduced. Value of closing stock of material will reflect the current market price, right? Will reflect the current market price means closing stock. Suppose I give you an example, students. I have purchased 100 units of material, I have purchased 200 units of material, and I have purchased 300 units of material, right? At the middle of the year, I had used 300 units of the material, right? So can you say from which goods my closing stock will be there? I have used 300 units of material, right? So according to FIFO method, same example will continue for LIFO also, right? So remember, when I calculate which method or which material I must have used first, the 100 one, yes, the 200 one, yes. So 300 which I received earlier, I will use that material, and my closing stock will be from the last 300 I had purchased, right? So last 300 means it is the recent material, so it will reflect the current market price, fine. So the most important thing, same points will continue in the other method also, so understand it carefully, right? So I hope everyone clear with the 5 advantages of FIFO method. In exam, students, you need to write down the method for it, how it is calculated. You need to write down one example, and you need to write down advantages and disadvantages. Disadvantages of FIFO method, right? As every coin has two sides, it also has disadvantages. FIFO method is improper if many lots are purchased during the period at different prices, right? In advantages we saw, if transactions again useful when they are not voluminous and prices of material are falling. Here it is improper method when lots are purchased, right? You are purchasing the material in various lots, that is in various batches, again during at a different prices. So it becomes very much difficult to calculate which material came first and which material came later on. The objective of matching current cost with current revenue cannot be achieved under FIFO method, right? The objective of matching current cost. Why? Because you are using the material which is older one, which is again the prices have become obsolete, and now you are using it, fine. So again with current revenue, revenue will always be high, students. Why? Because there is inflationary pressure due to which the prices increases and your cost is again low. So that will lead to again the objective of matching current cost with current revenue as unsuccessful. Next is, if the prices of the material are rising rapidly, the current production cost may be again understated, right? Why? Because suppose 5 days back I purchased a material at 100 rupees cost. Today the prices of the material has become 200 rupees, right? So I am today manufacturing and I am using the material with 100 rupees cost. So my cost will be less, right? So that is why it is said that current production cost may be understated. For example, if I today purchased the material, then it would have been 200 rupees, so my cost will also be increasing, right? But just because I purchased 5 days back and I am using that material and I am understating my cost, right? So that is also difficult. FIFO method overstates profit, especially in inflation. As I told you, my cost will be reduced by 100 rupees because I am having a material with a lower price. So my profit will also increase, and especially if it is a inflation, then it will definitely increase. I just take example of gold. Gold was again 42,000 rupees per 10 grams before lockdown. Today it is 51,000 per 10 gram, students, right? So for a jewelry manufacturer, if gold is purchased at today's price, my costing will be very much high for making the ornaments. But if I would have purchased before lockdown or again a week before, then I could have got at a very less price, that is 46,000 or 48,000 per 10 grams. So that will affect my cost, that will affect my profit during the inflationary pressure. I hope it is clear to each and every student with FIFO method, right? Again, we'll be explaining this with the help of example. Just now it is theory. Done, everyone. Again 5 seconds, go through all the disadvantages and then advantages. Okay, I suppose it is clear to each and everyone. Go through the advantages also. Then we'll start with the next method, that is LIFO. Okay, I suppose it is clear to each and every student. Fine. Next method is your LIFO. The name itself says LIFO means the rest all remains the same. The first letter changes, that is last in first out. If you have understood the FIFO method very clearly, this will be automatically clear, right? What is LIFO? Exactly opposite of your FIFO method, students. It is last in first out. Whatever material came last will be going out first. Fine. So last in first out, meaning that the most recently produced items are recorded as sold first, right? Again, the things which are produced at the last or the material which are purchased at the last will be sold first or will be issued first for the production, right? Simply this method assumes that the last inventories bought are the first ones to be sold, and that inventories bought first are sold last, right? So again, we'll be understanding this with the help of pictorial diagram of your FIFO, then it will be very much clear. Last in first out, right? How these things came, the first material came, the second, third and fourth, right? But the issue will be how much the fourth one will go out first, then the third one, then the second one, and first one will remain intact. After the completion of 4 3 2, first one will go out, right? So the sequence will be reversed. Last came but first out, right? First came but last out. I hope it is clear, right? So why it is done, we'll see, students, right? Again, LIFO method, as you all know, fine. Why it is done? Again, the assumption under which the method is based is that the last material purchased will sold first. Fine. Why? Because the materials are charged at a price of last purchase and then at the price of previous purchase and so on. Fine. Again, this method is reverse of your FIFO method, students. I hope it is clear. Fine. So we'll see first the advantages, disadvantages, and then with the help of your example. What are the advantages of LIFO method, students, right? Under the LIFO method, goods are issued at an actual price in contract to the weighted average method, and goods are issued at a calculated price, right? Again, weighted average method we will see after this method completed, but under LIFO method, goods are issued at an actual price, right? Why actual price? In your FIFO method we saw one of the disadvantage, that current price level is not reflected, right? Here the last purchase whatever is made, for example, I made a purchase, today is 28th of July, I made a purchase on 18th of July, I made a purchase on 16th of July, and I made a purchase on 20th July also, right? So tomorrow if I am producing, which material I will use first? Definitely the material which I purchased on 20 July, because we are in LIFO, right? So 20 July and 21 July, it is not much price variation which is done in the material prices, right? So again, it reflects the current price level, actual price level which is going on, not like FIFO where the price level have changed. Under LIFO, issues are at the latest prices as compared to FIFO where the goods are issued at old prices. Just now we discussed. Under this method, goods coming in the last are the first ones to get out. So closing stock is measured at the oldest price, so minimizing the effect of inflation, so preventing the closing stock from being overstated, right? In the last method, we saw that cost is understated. Here, the material which is purchased at a higher prices is again used immediately in the production or is again sold to the customer if we are dealing in finished goods, right? So what happens is we are having a closing stock having the lower value because our purchase price is low compared to the current level. It will be a lower value, right? So again, closing stock is not overstated. I hope it is clear, right? You must have solved the sums in the last lecture that were related to closing stock is shown at 10% less or closing stock is shown at 25% more, right? So what is that? It is understated or overstated. So your closing stock should always be shown at cost or market price, whichever is less. You must be aware of that part, right? So again, to show the closing stock at current prices is also one of the tasks for the cost managers, fine? So here the closing stock is overstated. I hope it is clear, right? So again, that is one of the advantage because we are not showing it and we are preventing it to be overstated. I hope it's clear. Fine. Next, starting with the disadvantages of LIFO method, right? LIFO method does not seem as logical as FIFO method, right? Because it is not logical. It is not applied for perishable goods. Suppose take for example you are dealing in milk. Suppose take example you are dealing in vegetables. Suppose take example you are dealing in some other perishable goods, right? So take for example dairy industry. So when you are in such industries, FIFO method is more logical compared to your LIFO method because the oldest goods will remain in your godowns only and then only this thing starts, fine? Under LIFO method, closing stock is not measured at the recent price that is done in your FIFO method, fine? Again, we saw closing stock. What will be forming your closing stock, students? It will be your older goods, older material which you had purchased few days back or few months back, and the recent will not be shown in that, fine? So again, closing stock which you are showing will be having a price which is understated. LIFO method of valuation of stock is not acceptable as per international accounting standards, right? This method is not accepted as per IAS, that is international accounting standard. FIFO is accepted. Hope it's clear, all of you, right? You need to understand just it for theoretical purpose and the sums are very easy that we'll be seeing it, right? Again telling you, very rarely asked in university exams, but if you see students, the trend in last 5 years paper, it is asked 3 times for 4 marks, not more than that, right? So again, we'll be quickly completing this topic so that you are clear with that part. Most important thing is you need to understand the sums, how it is solved, fine? Okay, so starting with the next one, that is weighted average method, right? LIFO has some of the advantages, disadvantages. FIFO has some of the advantages, disadvantages. On the basis of both of them, combining them, we started with weighted average method, right? It is the another form of method. This method is the most easy to calculate. It takes a weighted average of all units available for the sale during the accounting period and then uses that over the cost to determine the value of cost of goods sold and the ending inventory, right? So as the name itself says, weighted average method. What do you mean by average, students? Average is your mean, right? So this is weighted mean method. Again, as you can see in the picture, beginning inventory is there. These are your purchases, goods available for sale, that is again you have purchased an ending inventory, right? So whatever you have opening balance plus you have purchased, you mix up all the goods with their prices, you calculate a weighted average, and the last closing stock is calculated on the basis of weighted average price. I hope it is clear, right? Now where this method is particularly used, students, you need to be clear with that part. The weighted average cost method is most commonly used in manufacturing business, where inventories are piled up or mixed up together and cannot be differentiated, such as chemicals and oils, right? Now whenever you go to a chemical industry, right, students, the material which they are having, they don't keep it separately according to the prices or according to the purchases, right? What do? Is they keep it again, mix up along with all the chemicals, and then they start using it, fine? So in such industry where your individual chemicals cannot be put aside, they are used the weighted average method, right? So chemicals bought 2 months ago cannot be differentiated from those bought yesterday, as they all are mixed up. So in such industries, weighted average method is used. I hope it is clear to each and every student. Fine. So what are the advantages, disadvantages? Some of them we will see. Weighted average method is an acceptable stock valuation method as per international accounting standards. Right? The very first advantage is it is acceptable by IAS. Under weighted average method, goods issued in one go are priced at calculated price, thus assigning equal value to all the goods issued. Right? We'll study how you are solving weighted average method. Then you'll be understanding this point. Fine. Again, what are the disadvantages? Under weighted average method, goods are not issued at actual price but rather calculated price, because we are not taking in LIFO. In FIFO, we are taking the actual price at which the materials are purchased and issued, right? Here we are doing some of the calculation and a third price is taken apart from purchase and sales value. Closing stock is not measured at actual price, right? Definitely we are using weighted average method is completely calculated method. We are making our own figures for calculation. Fine. I suppose everyone clear now with FIFO, LIFO and weighted average method, right? FIFO, what comes first goes out first. Again, LIFO, what comes last goes out first. And in weighted average method, it goes out in sequence, but the price of each and every unit is calculated by ourselves. Hope it's clear. Fine. So we'll be seeing the format, students, first. What is the format? So students, as you can see, this is the format which you need to prepare for your sums, right? Again, the short sum will be there. What are the main columns you need to understand? There will be first heading, that is stock register under so and so method, right? If they ask you to prepare as per FIFO, you need to write down FIFO, LIFO or weighted average method, right? There will be around main four columns. The first will always be the date, right? So whenever they have asked in your sum certain date about the month and the year, so you need to write down here. Second column will be a combined column having three parts. There will be a receipt column, right? So again, quantity rate amount, issues column, quantity rate amount and balance column, quantity rate amount, right? So this will be the format. You need to be ready with the format when we start with the sums in the next lecture. Fine. So again, prepare the format in advance. How it works basically, students, suppose you have a certain opening balance of your stock at certain prices, right? So what you will write down here is, suppose I am having an opening balance on 1st of January 100 units at 2 rupees per kg, right? Just understand very carefully, your sum is very much easy based on this logic only. Fine. What I'll write is 1st January, I'll write down here quantity. I have 100 kgs, rate at 2 rupees per kg. So what will be my amount, students? It will be 100 into 2, that is 200 kg. Is it clear? Issues dash dash dash, balance again 100, rate of 2, amount will be 200, right? Now I am purchasing on 2nd January more 100 units at 3 rupees per kg. What I'll write is, again 2nd January, quantity 200 kg, rate again whatever quantity I have purchased, I'll write down here, rate I'll write down here, and I'll write down the amount by multiplying it. Issue again will be dash, quantity, now I will write down both the quantities, earlier 100 and the again which we have purchased. Fine. On 3rd of January, suppose I issue 100 kg material, right? So I'll write down in issue quantity 100, rate the quantity which I have earlier in my opening balance, right? So at 2 rupees, 100 into 2, that is 200 will be my amount. Balance I'll write down, right? So once we understand the sum, it will be very much easy for you, but for at the point of time you just need to understand the concept of the format of it, right? I hope it is clear. So you need to prepare four main columns: date, receipt, issues and balance, and the rest three will be having three columns more. Fine. I hope it is clear to everyone. Fine. So prepare the format in advance. When we do the sums in the next lecture, it will be helpful to you. Fine. Okay. Now say for example, students, this is one of the example. We'll understand the FIFO and the LIFO method with this part, right? Weighted average method directly I'll explain you in the practical hands-on lecture so that it is easy for you how to solve it. Fine. Okay. Now on 5th of February, you are having a opening balance of 2 kg and 1000 rupees per kg is the price. On 7th February, you purchase 7 kg at 1200 rupees per kg, students, right? 10th of February, you sold 1 kg 12th of February you sold 1 kg more, right? Why price is not given? Price you need to decide at what price you will be issuing the material. I hope it is clear. Prepare stock ledger from the following information. Fine. So first we will see how you do the calculation for your FIFO, then we'll see how you do the calculation for your LIFO. Is it clear, students? Right, the calculation is only for your understanding purpose. Don't go for the format which I have shown you just now is the final format which you need to prepare. That is easy and again very much effective by the university to calculate the sums. Fine. Okay, I hope you all are clear with the sum. We'll be seeing the solution first. How you need to show the thing, right? Opening balance 2 kg at 1000 rupees per kg. So under your FIFO, it will be your date on 5th February. Units are 2. Unit cost, that is for R, it is date, quantity, rate, amount, date, quantity, rate, amount. Fine. So on 5th February is your opening balance. You will write down under the receipt column, that is 2 units, 1000. 2000 is the total amount. Fine. As I told you, in your issues there will be dash. Balance will be again the same which we have written in the receipt column. I hope it is clear. Next transaction, 7th February you have purchased 7 kg at 1200. So simple, write down 7 kg in units. 1200 is per unit cost. My total cost will be 8400, right? Now remember students, you will be keeping both the material different. So first you will write down which is already having and the second which you have newly purchased, right? So my total quantity, if I say, that is 9 units and my total cost is 10,400, right? But I am keeping it different. Why? Because at the time of issue I'll come to know, right? Again I have sold 1 kg on 10th of February, right? So how I will write in the issue column, I will write down 1. Now this is your FIFO method, students. First in, first out. So whatever came first will be going out first, right? So from your opening balance, I'll be issuing this because the price is 1000. I will write down here, right? I'll write down again closing balance. How much is my closing balance? Now you need to understand. Earlier I had 2 units. From that I have taken out 1. So remaining is 1 at a price of 1000. And the next, the 7 which I purchased afterwards remains the same, right? It remains the same. Next I have again sold 1 on 12th of February, 1000. Why 1000? Because I am having the earlier 1000, that is first in, first out. So I'll take out it first. Remaining 7 I am having at a price of 1200, right? So what comes first? You need to understand 3 simple steps, students. Opening balance will always be written in the purchase column, that is your receipt column, at a price which they have given. Second, you need to again write down the purchases which you are doing at the same price. Then you need to calculate the balance. You need to keep separate the earlier one and the next one. And the third, whenever you are issuing, you need to issue it from the earlier one purchase, right? And the last will be remaining part which you have purchased the last. Hope it's clear. This is FIFO method, students, right? Next is you are having LIFO method. Now LIFO method, again exactly opposite of it, but the things remain the same, right? This is LIFO method. Your opening stock will remain the same. You will write down in the same way which you have written in FIFO. Remember, there is no difference in opening balance. Purchase will also remain the same. No difference in purchase you have written, right? So far your sum is same. I hope it is clear. The only change comes when the issue starts or the sales starts, right? 1 unit which you have sold on 10th of February. Now this unit in FIFO we sold it from the 2 units which you are having in opening balance. Here you will sell it from the 7 units which you purchased last, right? So 1 into price, that is 1200, right? Remember students, there will be no change in the quantity column also. The only issue is your units cost, the amount or the rate which you are taking, that makes the difference, right? So 1200 units I have taken it from your 7. So what I have is 2 units of earlier and 6 units of new purchase. Why? Because 7 I had purchases and from that I have taken out 1. So 6 I am having right now. Again, I sold, for example, here 2 units, right? There is a change in the sum. Now, for example, I sold 2 units. So this 2 units will again be from the newest purchase. That will be from 6. So now I am having only 4 and the 2 remains intact, right? So last in, first out. Only change comes is when the sales or the issues takes place. I hope it is clear to each and every student. Fine. Any doubts in that part? We'll be solving the sums. The sums will be very small, very easy to understand if you know the concepts, right? Only thing comes is when your sales or issues takes place. Again repeating, right? So from the next lecture onwards, we'll understand the, again I have the weighted average method also, but this we will see directly when we solve the sum, students, right? So again, from the next lecture, for 2 continuous lectures, we'll be solving these sums regarding your stock ledgers. Fine. So all the university sums of last 5 years paper we will be solving, because there are very limited. Again, alternate year it is asked. So we'll be solving that part. You need to be ready with the format, students. Fine. So again, I hope everyone is clear with this part. Now we'll conclude the lecture here, students. Thank you for your attention. I hope you all must have got the notes also. Start studying it. Fine. Start practicing the sums. If any doubts, any queries, you can put up in Google Classroom. Take care, students. See you in the next lecture. Have a great day ahead. Do well. Study well. This is Professor Shaurya Shah, teaching you Advanced Accounting and Auditing Paper 1. Thank you all for your attention.